Thinking about tapping into your home's equity this December? It's a smart question to be asking. After a long stretch of high rates, we're finally seeing some relief. But here's the trap: many homeowners, and you might be one of them, get tempted by the absolute lowest advertised rate. It's an easy mistake to make. Before you know it, you're ambushed by surprise fees, sky high closing costs, or a promotional rate that balloons into a number you can't manage just a few months down the road. One wrong move, one clause you miss in the fine print can turn a smart financial decision into a decade long headache. To make sure that doesn't happen to you, we're going to break it all down. This isn't just another list. We're going to compare the top HELOC lenders for December 2025, looking at their rates, their hidden fees, their fine print, and the one thing you absolutely must check before applying. My name is your name, and I'm going to be your guide. My goal is simple: to give you the clarity and confidence to make the smartest possible choice for your money and your home. We'll look at the big banks, the credit unions, and the online players to see who really offers the best value right now. By the end of this, you'll know exactly which questions to ask and which lender is the right fit for you. Let's get into it. Before we start naming names, let's build a solid foundation. If you're already a HELOC pro, feel free to use the chapter markers to jump ahead. But if you want a quick refresher on how these powerful tools work and why this moment in December 2025 is so important, stick with me. So, what exactly is a home equity line of credit, or HELOC? Think of it like a credit card that's secured by your house. Instead of a single lump sum loan, a home equity line of credit gives you a revolving line of credit. You can borrow from it as you need, pay it back, and borrow again. This makes it incredibly flexible for things like phased home renovations or creating a financial safety net. Your borrowing limit is all about your equity, the difference between your home's market value and what you owe on your mortgage. If your home is worth $500,000 and you owe $300,000, you have $200,000 in equity. Lenders use a figure called the loan to value (LTV) ratio to decide how much you can borrow. While 85% is a common benchmark, some lenders are more generous. For example, PNC allows qualified borrowers to go up to 89.9%, and we'll see others go even higher. In our example, a lender might let you borrow up to 85% of your home's value, $425,000, minus your mortgage, $300,000, giving you a potential HELOC of $125,000. Now, here's where the timeline gets critical. A HELOC has two phases: the draw period and the repayment period. The draw period is usually the first 10 years, where you can withdraw funds and often make interest-only payments, which keeps them low. But once that ends, you enter the repayment period. This can last up to 20 years, and your payments will jump, sometimes more than doubling, because now you're paying back the principal and the interest. This transition shocks a lot of unprepared borrowers, so you have to plan for it. Most HELOC rates are variable, tied to a benchmark like the US prime rate, which follows the Federal Reserve's lead. Recent Fed rate cuts in late 2024 and October 2025 have helped push the national average HELOC rate to around 7.81%, matching a low from 2023 and creating a nice window of opportunity for homeowners. Conversely, when the Fed raises rates, your payment goes up. This uncertainty is why some lenders now offer fixed rate conversion options, which let you lock in a rate on some or all of your balance. It offers predictability, but often at a slightly higher initial rate. Finally, why a HELOC? For many, it's about protecting a fantastic low-rate primary mortgage. If you refinanced when rates were at historic lows, the last thing you want is a cash-out refinance at today's higher rates. A HELOC lets you access your equity without touching that precious first mortgage. All right, that's the groundwork. Let's find out how to navigate this market. To give you a real transparent comparison, we looked at way more than just the headline interest rates. A low APR is great, but it's only one piece of the puzzle. To find the truly best lenders for December 2025, we analyzed them based on what really matters: the total cost and flexibility of the loan. First, we looked at the annual percentage rate, APR, both the variable rates and any introductory teaser rates. Some lenders offer amazing rates for the first 6 to 12 months, which is a huge plus if you're drawing a big amount right away. We'll break down how long those intro rates last and what the rate jumps to afterward. Second, we dissected the fees. This is where people get tripped up. We hunted for lenders with low or no annual fees. For instance, PNC charges a $50 annual fee, while US Bank charges a $75 to $90 fee after the first year, which can sometimes be waived. In contrast, lenders like Bank of America and Figure have no annual fees at all. We also dug into closing costs. Many lenders advertise no closing costs, but the fine print often says you have to pay them back if you close your account within 3 years. We also looked at origination fees, inactivity fees, and any other hidden charges. Third, we compared loan to value (LTV) ratios. If you need to borrow the maximum amount possible, LTV is key. While the industry standard often hovers around 85%, some institutions are more generous. As mentioned, PNC goes up to 89.9% in some areas, and some credit unions like Navy Federal allow for even higher LTVs, giving you access to more of your equity. Fourth, we examined loan structure and flexibility. This includes the draw and repayment periods. The standard is a 10-year draw and 20-year repayment, but some are much different. Navy Federal offers a stunning 20-year draw period, giving you 2 full decades of access. On the other hand, Figure offers shorter draw periods from 2 to 5 years, which is great if you want to get to the repayment phase faster. We also prioritize lenders who offer a fixed rate conversion option, like TD Bank and Truist, which is a valuable tool against future rate hikes. Finally, we looked at special features and discounts. These are the perks that can tip the scales. Bank of America has a complex but potentially amazing discount system for rate reductions. Other banks like PNC and TD Bank offer a standard 0.25% discount for automatic payments. By stacking up lenders against these 5 pillars, rates, fees, LTV, flexibility, and perks, we can get past the marketing fluff and give you a real comparison. All right, this is the main event. We're going to break down our top 5 HELOC lenders for December 2025. For each one, we'll cover their key features, pros, cons, and who they're the best fit for. Remember, the best lender for your neighbor might not be the best one for you. Lender number 1, Bank of America, best for discounts and no fees. First up is one of the biggest HELOC lenders in the country, Bank of America. Their main appeal is a powerful combo of no-fee structures and a layered discount system that can seriously lower your rate if you're an existing B of A customer. Let's start with fees, or the lack of them. Bank of America has no application fee, no closing costs on lines up to $1 million, and no annual fees. This makes the upfront cost of getting your HELOC virtually zero. Now, the main event, the rate discounts. This is where you can win, but you have to know the system. First, there's a standard 0.25% discount for setting up auto pay from a Bank of America checking account. Second, and this is unique, you get a discount for a large initial withdrawal, a 0.1% rate reduction for every $10,000 you withdraw at opening, stacking up to a massive 1.5% discount. Finally, Preferred Rewards members get an additional discount from 0.125% to 0.625%. If you can stack all three, you could land one of the lowest rates out there. Their structure is a standard 10-year draw and 20-year repayment, and they let you borrow up to 85% of your home's value. They also have a fixed rate conversion option. So what's the catch? To get the biggest benefits, you really need to be in the Bank of America ecosystem. The best discounts are for customers with checking accounts and significant assets. Their base APR before discounts isn't always the absolute lowest. Who is it best for? Bank of America is the clear winner for existing, loyal Bank of America customers, especially those in the Preferred Rewards program. It's also perfect for someone planning a big project who can take a large initial draw to max out that withdrawal discount. Lender number 2, PNC Bank, best for high LTV and introductory rates. Next up is PNC Bank. PNC finds its edge by appealing to homeowners who need to borrow more of their home's equity and those looking for a strong introductory rate. PNC's standout feature is its max loan-to-value (LTV) ratio. While many banks stop at 85%, PNC lets qualified borrowers go up to 89.9%. That extra 5% can mean thousands more in your credit line, a game changer for big renovations. The second draw is their intro rate. For the first 6 months, PNC offers a promotional rate that is set below the prime rate. This can mean big savings, especially if you use the funds early. And like others, they offer a 0.25% rate discount for auto pay from a PNC checking account. Structurally, it's a standard 10-year draw and 20-year repayment period. They're also known for having a wide range of repayment term options. There are a couple of things to watch out for, though. PNC does charge a $50 annual fee. While not huge, it's a cost some competitors don't have. More importantly, if you close your line of credit within the first 36 months, you might have to repay some of the closing costs the bank covered for you. A common but crucial piece of fine print. Who is it best for? PNC Bank is a great choice if your main goal is maximizing your borrowing power. If you need to get as close to that 90% LTV as possible, PNC should be on your list. It's also great for strategic borrowers who can use that 6-month intro rate to their advantage. Lender number 3, Navy Federal Credit Union, best for flexibility and military members. Our third lender is a credit union, and it's a fan favorite for a reason. If you're eligible to join, membership is generally open to the armed forces, veterans, DoD civilians, and their families. They offer some of the most borrower-friendly terms anywhere. The single most impressive feature is the structure, a 20-year draw period. That's double the industry standard. It provides incredible flexibility, turning your HELOC into a long-term financial tool for 2 full decades. After that, you get a 20-year repayment period. Navy Federal is also a leader in high LTV lending, allowing some members to borrow up to 95% of their home's equity. This is among the highest you'll find. Their fee structure is also fantastic. They proudly advertise no application fees, no origination fees, no annual fees, and no inactivity fees, and they state they will pay for all closing costs. Their interest rates are also highly competitive, with APRS as low as 7.25% for well-qualified borrowers. The only catch is the membership requirement. You have to be eligible to join, but for the millions who are, it's hardly a barrier. Who is it best for? Navy Federal is, without a doubt, the top choice for eligible military members, veterans, and their families. It's perfect for anyone who wants maximum long-term flexibility, high borrowing power, and minimal fees. Lender number 4, Figure. Best for speed and fixed rate certainty. Now for something completely different. Figure is a digital lender that has shaken up the market with speed and a unique loan structure. If you need funds fast and hate the idea of a variable rate, listen up. Figure's biggest selling point is speed. A traditional HELOC can take over a month. Figure's all-digital process can get you approved in minutes and funded in as little as 5 days. For a time-sensitive need, this is a game changer. Their loan structure is also different. Instead of one long variable rate line, Figure's HELOC works more like a series of fixed-rate loans. You get a total credit line, but each time you draw funds, that draw is locked in at a fixed rate for a term of your choice, typically 5 to 30 years. This gives you the flexibility to draw when you need to, but the certainty of a fixed payment on every dollar you borrow. Figure also has no annual fees. However, and this is critical, they charge an origination fee of up to 4.99% of your draw amount. This is a significant upfront cost that most banks waive. Their draw periods are also much shorter, usually 2 to 5 years. Who is it best for? Figure is for the tech-savvy homeowner who needs money fast. It's also perfect for the risk-averse borrower who wants the absolute certainty of a fixed payment. Just be ready for that upfront origination fee. Lender number 5, Truist. Best for a generous intro rate. Rounding out our list is Truist, formed from the merger of SunTrust and BB&T. Truist makes a strong play for new customers with one of the most generous introductory rate offers on the market. Truist's flagship feature is an introductory interest rate offer for the first 9 months after opening your account. While other lenders offer a 6-month deal, those extra 3 months of discounted interest can add up. This is great for a large, phased project where you might be making multiple draws. Beyond that, Truist operates like a traditional lender. They have a fixed rate conversion option, which gives you a safety valve if you're worried about rates rising. They're also one of the nation's largest HELOC lenders, offering the stability of a major bank. On the downside, Truist isn't always the most transparent with its rates online, so you often need to apply to see your specific numbers. They may also charge an annual fee, so you'll want to confirm the details of your offer. The main reason to pick Truist is to strategically use that 9-month intro window. Who is it best for? Truist is perfect for the strategic borrower with a clear plan to maximize a promotional offer. If you have a big expense planned over the next 9 months, you can use Truist's intro period to borrow at a significant discount. We've covered 5 great but very different lenders. Now let's make this personal. The best lender depends entirely on your credit, your goals, and your comfort with risk. First, be honest about your borrower profile. Your credit score is the single most important factor. If you have excellent credit, 740 plus, you're in the driver's seat, you'll qualify for the best rates everywhere. Shop aggressively, get quotes from Bank of America for their discounts and Navy Federal for their terms. You have negotiating power. If you have good credit, roughly 680 to 740, you still have great options. Lenders like PNC and Truist will be competitive. Focus on the total cost. Weigh Truist's 9-month intro offer against PNC's higher LTV. It's a trade-off. Do you need more money or a lower initial cost? If you have fair credit, around 620 to 680, your options are more limited and rates will be higher. Your best bet is often with credit unions, which can be more flexible. Also, look for lenders that specialize in this credit range. The key is finding a lender who will approve you with reasonable fees. For instance, an amazing introductory rate from a lender like Schools First FCU, which has offered rates as low as 4.99% APR, could save you a lot of money even if their standard rates are higher. Second, what's your primary goal? Are you looking for a long-term emergency fund? If so, Navy Federal's 20-year draw period is unmatched. Do you need speed and certainty for an urgent problem? Figure's digital process and fixed-rate draws are built for you. Are you a cost-conscious borrower focused on the bottom line? Don't just look at the APR. A lender with a small annual fee but a lower interest rate might be cheaper over time on a large balance than a no-fee lender with a higher rate. Run the numbers. Finally, always shop around. Get quotes from at least 3 different types of lenders: a big national bank, a local credit union, and an online lender. It's the only way to get a full view of the market and secure the best deal. Before we wrap up, let's shine a light on the hidden traps, the fees and fine print that can ruin a good deal. First, application and origination fees. Many great lenders now waive these, but you must ask. An origination fee, like the one Figure charges, can add thousands to your upfront cost. Second, annual fees. While many lenders like Bank of America don't have them, others like US Bank, $75 to $90, and PNC, $50 do. It's not a deal breaker, but it's a recurring cost. Third, look out for inactivity fees. It's a sneaky one. Some lenders will actually charge you a fee if you don't use your line of credit. Verify that your lender doesn't have this policy. Fourth, and this is a big one, are early termination penalties. Let's say you get a HELOC, fix your kitchen, and then 6 months later you sell the house. You have to pay off and close the HELOC. Many lenders, including PNC and US Bank, will charge you a fee, often hundreds of dollars, if you close the account within the first 2 or 3 years. They do this to recoup the closing costs they covered. Always ask, what is the penalty for early closure? Being aware of these traps lets you look past the flashy ads and see the true cost of the loan. We've gone through the HELOC market of December 2025, from the basics to the fine print. You now know that with national average rates becoming more attractive, it's a good time to consider tapping into your home's equity. You also know that the best lender isn't just the one with the lowest advertised number, but the one whose terms, fees, and structure align with your financial life. Whether you need Bank of America's discounts, PNC's high LTV, Navy Federal's flexibility, Figure's speed, or Truist's intro offer, you have the knowledge to choose wisely. With rates where they are, now is a great time to consider a HELOC, but always compare your options. The most important step you can take now is to get personalized quotes. To make that easy, I've included links to the lenders we discussed today in the description below. Getting your specific numbers is the only way to know for sure what you qualify for. Please be aware that some of those links may be affiliate links, meaning I may earn a commission at no extra cost to you if you work with them. It's a way to support this channel, and let me keep making guides like this one. If you found this guide helpful and feel more confident about your HELOC options, do me a favor and hit that like button. It helps other homeowners find this information, and be sure to subscribe for more deep dives into personal finance. Finally, I want to hear from you. Let me know in the comments which lender you're considering, or ask any questions you still have. I'll do my best to answer every single one. Thanks for spending your time with me today. Now go make that smart money move.